This year's U.S. election is once again Trump versus Biden. Whoever wins will change the domestic and foreign policy of the United States in the future. Some policies will be good for the stock market and some industries, while other policies will be very bad for them. Because the market is forward-looking, if you wait until the election results come out to pay attention, it will be too late. So in today's video, let's see what impact the U.S. election will have on the stock market. Here are two blue lines in this chart. The light blue one is the average trend of the U.S. S&P 500 index in years without presidential elections. The dark blue line is the average trend when there is an election. What can we notice from this? In years with elections, the stock market is usually weaker, especially in the first half of the year, because which candidate wins can have a big impact on the stock market. And stocks, investors are worried about this in the half year before the election, making the stock market usually weaker. The fluctuations are bigger, but after the election, once the uncertainties are resolved and it is known who won, the stock market rebounded. By the end of the year, the average return for the entire year almost returns to levels seen in non-election years. The green line represents the performance of U.S. stocks this year, which has increased by 10% since January. As both institutional investors and individuals are rushing to buy stocks now, stock allocation is almost the highest in history. But just because the performance is so good, it would not be surprising at all if the market adjusts before the next election. However, it is difficult to predict the market trend because many factors affect it, with the election being just one of them. Additional factors include the impacts of AI on business, the U.S. Fed preparing to cut interest rates, and inflation seeming to be coming back. Prices of commodities such as oil, copper, and gold have risen sharply during this period. Commercial real estate issues and the wars in Ukraine and the Middle East will all impact the stock market. The election is just one of the many factors. The impact of the election on the market is harder to observe, but much more obvious at the industry and stock levels. The two candidates have very different policy directions. If Trump wins, it is helpful for some industries, while others will suffer. Since the stock market is forward-looking, these stocks have moved with the chance that Trump will win. U.S. investment bank Goldman Sachs has created a 2024 Republican Policy Pair Index, a basket of stocks that are expected to benefit if Trump wins, and shorting stocks expected to underperform. The performance of this index has increased with Trump's chances of winning since March last year. According to a gambling website, the market now thinks Trump has a higher chance of winning than Biden, with the chance rate having changed significantly from a year ago. In this index, what stocks are being held? These are the industries that will benefit if Trump wins. For example, he will help oil companies obtain licenses more easily, allowing more fossil raw materials to be produced in the United States. The second industry to benefit is related to Trump's slogan, "Make America Great Again." Part of this involves creating more jobs in America and putting taxes on products produced by others to make U.S. products more competitive. Therefore, companies with production in the U.S., or those that have announced they will move more operations back to the U.S., such as Intel and Broadcom, may benefit. Trump, a businessman before joining politics, and Republicans are generally pro-business. During his previous presidency, he signed the Tax Cuts and Jobs Act, which lowered tax rates for U.S. businesses. This policy helped some wealthy people and financial services companies that like to put their assets in companies. His tax cut policy has almost expired, so if re-elected, one of his goals is to lower the tax rate for U.S. companies and reduce the capital that banks need to hold, enabling them to lend more money, which will help U.S. companies and the entire economy. This will particularly benefit American banks. On the other side, which industries will suffer if Trump is president again? Or in another way, because the market already thinks Trump will win, these stocks have fallen a bit, so in theory, they will bounce if Trump doesn't win. Some policies, such as changing tax rates, are not easy to implement as the approval of Congress is required. But for other policies, such as those related to trade, the U.S. president has more ability to change them. In terms of trade, Trump said that a 10% tariff would be added to imported products. and if they come from China, even more tariffs would be added. During his previous presidency, he already added a 25% tariff. This time, he proposes to increase tariffs by at least 60%. He explains that these tariffs will reduce the U.S. trade deficit, helping the U.S. make more money and make imported products more expensive, thereby making U.S.-produced products more competitive. However, is it that simple? If you impose taxes on other countries' products, won't they impose taxes on American products in return? Of course they will. Economists at more than one investment bank estimate that if the U.S. increases import tariffs, it will ultimately hurt its own economy. This conclusion should not be surprising because the U.S. imports more than it exports, meaning it buys more things than it sells. If you raise tariffs and others raise tariffs on your products, who suffers more in the end? Americans, especially those with low incomes, because tariffs cause prices to rise, and the ratio of expenditures of low-income people is higher than that of high-income people. The final impact is more expensive goods, higher inflation, and reduced consumer capacity. The uncertainty about tariffs makes people less confident in doing business. So overall, although it sounds good to put tariffs on foreign products and put more tariffs on the enemy's products to bring jobs back to the U.S., it is not economically feasible. Those jobs may return to the U.S., but things will become expensive. Imported products made by others with low wages, like a toy made in China or Southeast Asia, which only costs $5. But if it must be produced in the U.S. where wages are higher, that toy will cost $20, leading to serious inflation and a significant impact on consumers. Therefore, the profit margins of the consumer industry and stocks importing Chinese products, such as Nike, Skechers, and Target, are under pressure recently as Trump's chances of winning increase. The second issue relates to the labor market. Although the U.S. Federal Reserve has increased interest rates by 5%, the U.S. labor market is still strong. Latest labor data, such as non-farm payroll, is always higher than economists' expectations, indicating a tight labor supply. If Trump becomes president again, his policies to protect American jobs will make it more difficult for foreigners to get approval to work in the U.S. and will kick out illegal immigrants. This is good for legal U.S. citizens, as it will be easier for them to find jobs, but it will make the labor market even more understaffed, leading to expensive labor costs for companies. Strong businesses with pricing power may pass these costs to consumers, but others without such power will suffer, potentially causing business failures. Industries with high labor expenses, such as restaurants and hotels, will see increased costs. That's all for today's updates. If you like this video, please press like before leaving. See you next time.